Okay, good morning, everybody, and thanks for joining us for a Tax Practitioners Board webinar. My name is Trevor Hickman, and I'm hosting today's session on breach reporting. Today, I'm joining you from Ngunnawal and Ngambri country, and I'd like to start with a quick acknowledgement of country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respects to them and their cultures and elders past, present, and emerging. Next, I've got some quick housekeeping messages. First, to access today's slides, you can visit our webinar resources hub at tpb.gov.au/webinar/hub. The address also appears on screen on this slide. We'll also email you a copy of the slides following this webinar. Don't forget, today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we'll issue an attendance certificate to those of you staying online for the webinar today. I'd next like to cover what we're going to talk about today. Today's presentation will help you understand the new breach reporting requirements as we run through our finalised information sheet. Together, we'll unpack the objective of breach reporting obligations, factors to consider when reporting, our approach to investigating notifications, who to notify, and we'll share some case studies, and then we'll debunk some breach reporting myths. To conclude, we'll share some case studies and we'll answer some of the questions we received during the webinar. So make sure you submit your questions via the Q&A. In that regard, we have Daniel, Vishnu, and Etty from our policy and legislation team joining us to respond to your questions as we go. To find the Q&A, simply hover your mouse over the screen and a range of icons will appear on the bottom of your screen. You can also use the chat function to speak to other participants. We won't be monitoring the chat closely throughout the presentation, so if you need a response from us, be sure to use the Q&A. To disable any of these functions, simply hover over the relevant icon and unselect Show Preview. Also, please remember to keep your comments courteous and professional. I'd now like to introduce our speaker for today, TPB board member Deborah Anderson. I'd also like to introduce my colleague, Julie Shaw, who'll be chatting with Deborah today. Julie, over to you first.
Thanks, Trevor, and good morning to everyone who's joining us today, and welcome to you, Deborah. Thanks for coming on board again. As we all know, the breach reporting obligations were applied to all registered tax practitioners late last year, and that was under the Tax Agent Services Act 2009, or the TASA for short. So I was hoping that you could begin today's conversation just by giving us a bit of an overview of what the breach reporting obligations are.
Well, thanks, Julie, and welcome to everybody. How many people have we got today, Julie? Do you know?
We've got over 3,000 so far.
Fantastic, and welcome to everybody. I hope you have had a lovely morning already. So let's dive into our breach reporting. And our breach reporting requirements have been strengthened, as you know, to support the majority of the tax practitioners in their voluntary compliance with professional and ethical standards. So the aim is, by raising the professional and ethical standards of tax practitioners, breach reporting improves the overall provision of tax practitioner services, it enhances consumer protection, and it increases the community confidence in the integrity of the system that regulates those services and, of course, the tax profession. So as registered practitioners, and when I say tax practitioners, I am referring to both BAS agents and tax agents alike. So, but as registered practitioners, you must comply with your breach reporting requirements. And there are essentially two types of breach reporting requirements under this obligation. And the first one is self-reporting. So under this requirement, you need to notify us, the TPB, in writing if you have reasonable grounds to believe that you have breached the code and that breach is a significant breach. The second requirement under this code is that you need to report another tax practitioner. And here it is if you have reasonable grounds to believe that another tax practitioner has breached the code and that the breach is a significant breach. And in that case, you need to notify us and also their recognised professional association of that tax practitioner, if applicable, in writing. So the obligation is to encourage practitioners who, know their obligations under the TASA very well, to improve their voluntary compliance. And by requiring the reporting of significant breaches of the code, it will also allow the TPB and the recognised professional associations to focus their compliance, their strategies, their education, and their support to the greater practitioner community to those particular issues that are impacting the tax profession. The additional reporting requirements are largely consistent with existing obligations under the Code of Professional Conduct and the TASA, and they're not meant to be a punishment. So I know you feel a lot of agents are feeling that they've been grouped with people who have behaved poorly, but we honestly do know at the TPB that the majority of practitioners do the right thing. And even if you make a mistake, we're all trying to do the right thing. So, we are very aware of that. So I want to make it really clear that although the breach reporting obligations are a standing obligation, we don't expect you to continuously self-assessed as a recurring action. So it's not like on your to-do list every day you go, wow, are there any breaches I need to report? And we don't expect you to assume the role of either a investigator or an auditor when you take over from another practitioner, or even in your own business. You're not expected to go looking for breaches that other tax practitioners have done. And the other thing I wanted to say here is that the requirements largely mirror the professional standards that are already part of the Accounting Professional and Ethical Standards Board. So if you're a member of CPA, CANS or IPA, you're already covered under those obligations anyway. So therefore, the guidance provided in the standards may be of assistance in developing your practices, policies and procedures to incorporate breach reporting.
Thanks, Deborah. That was some really good clarifying information, and I think it's a good way to sort of set the scene for the conversation today. I do want to unpack it a little bit more because you did mention in there that there's two important distinctions. First of all, that you must have reasonable grounds for the belief that you or another tax practitioner have breached the code. And then secondly, you talked about the fact that it needs to be a significant breach. So just hoping that you could break down those two points and give us a bit more clarity on those, please.
Sure. So let's first look at what it means to have reasonable grounds. I think that's probably the logical place to start here. Breach reporting obligations don't make a distinction between an actual breach or an alleged breach. However, as you mentioned, you do need to have reasonable grounds to believe that there has been a significant breach. So this means you have to have a solid foundation or factual basis for your belief, and that should be supported by appropriate facts and evidence. Now, it's an objective test which looks at whether a reasonable person in your position would form the belief in the same circumstances. So you're all registered, you're all qualified, you've all experienced. So would another practitioner equally, of your education and experience, would they believe that it is a breach? Is probably a good way to think of it. Now, you don't have to have conclusive proof. So we're not expecting you, as I said, to go in and be investigators or do a full audit. So you don't need conclusive proof that a breach has occurred, but what you do need to be able to do is appropriately substantiate a claim or verify or corroborate it as appropriate. And we appreciate that the nature of relationships between parties, and in some cases you could be notifying another practitioner, if you are notifying, another practitioner's breach, can be really difficult or sensitive depending on, the situation, if you're in a small town or if they're a colleague. And, let's be honest, I'm a tax practitioner too. I know that the profession is actually quite close in some cases as well. So, it can be difficult and it can be sensitive. So the belief is that, the belief that it has to be on some kind of proof, not on hearsay. It can't be based on an opinion that you have of somebody else. Like if they post a, dumb question on a forum or something like that, that is not proof that, that practitioner has done the wrong thing. And hearsay, obviously, if you hear other people talking about another practitioner, that is not proof. So you do need to be able to substantiate it, and it does need to be on reasonable grounds. And I'll take a moment there because I know one of the things that prior to these rules coming in, there was a big concern about people making frivolous or vexatious or malicious claims against competitors, for example, or even ex-employees or ex-employers. And one of the things that, I'm going to start with saying that we actually haven't had any of those. So I'm going to tell you that right now, categorically, none of those have happened, which is really good. It means our education on that particular point has come through. It also goes to show there is integrity within the profession, which I think is also really nice to know as a practitioner. But if somebody was to do that, I can assure you that the board would take that just as serious, if not more seriously, than a breach or a significant breach, because making false or misleading statements, really comes to that whole registration requirement of whether you are indeed a fit and proper person. And if you're making false or vexatious claims against somebody that are unfounded, your honesty and integrity really is to be questioned. So now if I move on to significant breach, because I know that's the second one that you brought up, I'll explain that a significant breach, although it isn't actually defined, and I know that's quite tricky, and significant can mean different things to different people. And I always liken it to, if I say to you, I've just bought an expensive car, some of you will think I've just bought a BMW, some will think I've bought a Tesla, and some will think I've bought a Maserati. So significant is very much like that as well. But a significant breach of the code is a breach that constitutes an indictable offence or an offence that involves dishonesty under Australian law. So, a lot of those things are things like fraud, those types of indictable offences. And I will note here, indictable offences can be slightly different in every state or territory, but at the end of the day, their sort of base is, reasonably similar. And the other one, as far as significant breach of the code is that it will result or likely to result in a material loss or damage to another entity. And that entity could be the client, or it could be the Commonwealth. So, they're the things to take into consideration. Otherwise, significant includes considering things like the number or the frequency of similar breaches by the same tax practitioner. So, for example, a topical one at the moment is a tax agent that has gone into liquidation, for example, And so their rather large base has been going to other practitioners, and the other practitioners are seeing this massive pattern of significant breaches. So they might not necessarily be significant in one, but when you start putting them all together and you've got 5 or 6 or, depending on the type of breach, it could be 2, you can see there that there is a pattern. And that is something that you need to take into consideration when you start thinking about whether it's significant or not. The other considerations are whether it would impact on the tax practitioner's ability to provide tax or BAS agent services, and the extent to which the breach indicates that the tax practitioner's arrangements to ensure compliance with the code are inadequate. And you can always go back to the Tax Agent Services Regulation 2022 to have a look if you'd like some more information on that. So I think the long and short of that is that determining if a breach of the code is significant needs to be decided on a case-by-case basis. It's very difficult for anybody to, define it exactly. And every single case will be looked at on its own particular facts and circumstances.
Thanks for that, Deborah. That was really helpful. And I do notice that we've had a lot of questions so far coming in asking specifically what is a significant breach. So hopefully your explanation has helped address that. But also we do have some case studies coming up a bit later where we'll show some examples just to sort of clarify and put it into context for everyone as well. So Deborah, next I just wanted to ask how tax practitioners should go about making an assessment or whether or not a breach is significant. So I guess just unpacking that a little bit more. You said it should be determined on a case-by-case basis, but what types of things should tax practitioners be considering before reporting?
All right, so there are a number of things you can consider. So firstly, the code items under the TASA, and I know they have changed recently. So just a note here that if you haven't done a refresher course on TASA in quite a while, it might be worthwhile getting online and doing a TASA course. I think you can get some for 1 or 1.5 hours, which is certainly worth doing. And of course, you can claim CPE on that. But you know what those standards of professional and ethical conduct are that you're expected to be. So you can judge based on that. You should also be able to make an assessment about whether a breach is significant in relation to your own conduct and whether you need to report it. So especially if it is internal or your own conduct, you know what the facts and circumstances are around that breach. And, you know whether it's significant in your own practice and whether it's significant for your client or indeed the Commonwealth. So again, just looking at all those different aspects. We recognise that establishing if a breach is significant in relation to the conduct of another tax practitioner may not be quite as straightforward. You're not necessarily privy to the same level of information about the breach or a potential breach. And again, it will depend on the analysis of the circumstances and the consideration of the number of factors which we've discussed already here and will continue to discuss, but also have a look at our guidance. We've got an enormous amount of guidance and, some of it is in a lot of detail that can really help you work through, and we've gone out of our way to do lots of case studies for you in those documentations. So if you do believe that there are reasonable grounds that a breach is significant, you do need to be able to substantiate that belief, and then that's generally sufficient to do the reporting. If you're not certain if there's been a significant breach of the code, but you have reasonable grounds for believing that there has been, if in doubt, report. And I'll go through a little bit about the reporting later, so that'll I guess, put a little bit into context when I say if in doubt, report, because not every report is going to mean termination of an agent or something like that. Okay. So, and yeah, as I said, we will look at the facts and circumstances of every case, and you need to look at the facts and circumstances of every case as well. As I said, you know, if there's a number of similar issues, you know, they add up to significant. So, you know, they might all not individually be, but together they paint a picture of significant.
Thanks for that, Deborah. That's really helpful. Just moving on a little bit now, and I just wanted to find out what the TPB's approach to the compliance of breach reporting will be. If you could just give us some information on that, please.
Yeah, and this is what I was just talking about, because when it comes to the TPB's approach, our very first point of call is always to educate and support the practitioners through it. Okay, we really only want to be doing investigations and sanctions for those more serious cases, the high risk cases of, you know, serious non-compliance. So more specifically, as I mentioned before, a significant breach or a potential significant breach does not automatically trigger a formal investigation. We will triage what they are, and often it's quite funny because you might do a report and we might not do anything about it, right? And you think, oh, they're not doing anything about it. But then what happens is a month later, somebody else reports something similar, same agent. And then a couple of weeks later, another report comes in. And as you can see, then you start building a much bigger picture of what the problem is. So what we do is if we get those reports, we triage it, we risk assess it, and we just do a preliminary analysis of what the breach is. If we think it's requires more investigation, we start making relevant inquiries, and we will use information available to us, and that might be through the TPB, what might be from the client, and also, of course, any information you can give us is obviously really helpful as well, to help us assess and to validate whether the potential breach is firstly significant and worthy, or, you know, have we got enough to do an investigation? But we also, at that point, at the very beginning, have a look at it and go, is this frivolous, vexatious or malicious? Because obviously we don't want that to happen, because that would undermine the whole intent of this legislation. So as I said, we take a risk-based approach when deciding whether to commence a formal investigation. And when we do that, we look at things like the nature of the breach, the seriousness of the breach, the level of risk involved. You know, if we're looking at a $150 error versus, say, a $500,000 error, you know, obviously they have, you know, very different outcomes. We also have a look whether there is enough evidence to support the breach. And in the case of breach notification about another practitioner, what were the circumstances surrounding the making of the notification and the relationship between the parties? And we do try and be very sensitive about that. And as much as you can do anonymous complaints to us, really it limits us, because if there's one piece of information that we're the TPB are missing, we have nowhere to go to say, hey, what about this? And it's interesting, having sat on the side of the TPB and seeing the cases, investigations are very different to the world that tax and BAS agents work in. So what we or tax and BAS agents take as just known or whatever, if that's not actually articulated to through the complaint, it could be that just that missing piece of information that our investigators need. And we also take into consideration the relationship, as I said, if you're in the same practice or in a small town or those types of things. We also have a look at the compliance history of the practitioner that you might be reporting. So we do see a correlation between a practitioner's personal compliance and their client's compliance. And we also have a look at whether the breach has been rectified or remedied. So obviously any steps that have been taken to fix the problem, will always help make sure that case is looked at in its entirety, and also have a look at the nature and the scale of the business. We look at the number of clients that might have been involved in this particular instance. We have a look at what the impact or harm to clients and the tax system more broadly is. And we also have a look if the breach is reported outside of the 30-day notification period and what some of those reasons for any delay might be.
Thank you for that, Deborah. Just following, someone putting in a report, what are the consequences then for someone if they are investigated and have found to be in breach of the obligations? What happens to them?
Okay, so as always, we are very alert and responsive to the higher risk misconduct and regulatory breaches. That's our first point of call. For those ones, they could be firstly in breach of Code Item 2, which requires tax practitioners to comply with the taxation laws of the conduct of their own affairs, and there may also be some criminal sanctions on that as well under the Tax Administration Act 1953. Another factor that might need to be taken into consideration is whether the agent meets the fit and proper registration requirement anymore. And as I said, no two cases are the same. So we always try and take a pragmatic approach to assessing non-compliance, especially with the new obligations, because, we know they're new. There's been a lot of change in the space or in the profession in a really short space of time. So determining what the appropriate compliance action to take is really important to us because, one, we want to be making sure that we focus on education as our number one priority. In the more serious cases, we would, and I guess it's a sliding scale, but at the lower end, we would issue a written caution or an order to do a specified action. And usually those orders are things like to either get your own personal tax obligations up to date or to go and do a course. So, for example, if we saw a work-related expenses case, we might ask that the agent to go and do a specific work-related expenses course or something along those lines to get their education up as well. Then we get to the more serious end, where here we might suspend a registration or terminate a registration. And often what happens is we do the written caution, then we do, an order, and then the agent doesn't actually do those or follow up on those. And so then it comes back to us. So in some cases, the reason that somebody ends up getting suspended is because they got in trouble. We gave them every opportunity to fix it. They didn't do it. So then we gave them a written caution and an order to do it. And then they didn't do that. And so then we've really got no other option but to go down the suspension or termination route. And of course, for the really serious cases, we can impose a ban on reapplication for registration up to a maximum of 5 years. And that's legislation. I won't lie, I've seen cases where I thought that should be for life, but we don't have that legislation. We can only say up to 5 years. And that does not mean that you automatically come back in after 5 years. You still need to apply and you still need to meet all the prerequisites. And one of those is fit and proper person. So we always look at that at the time.
Thank you, Deborah. I think that's actually reassuring to know about the pragmatic approach to compliance and also the fact that education is high on the priority list too. So I think that's quite good to know. Just wondering now if we could have a look at the practical application of this obligation and ask if you can touch on how practitioners can notify us and professional associations of a significant breach.
Cool. So you need to notify us in writing. The notification can be done through our online complaints form if it relates to the conduct of another practitioner, or you can notify us through a notify a change in circumstances form if it's your own. And I point out here that while we send you an acknowledgement that we have received your report, it doesn't mean that we are confirming that you have met your obligations. For example, if you're self-reporting, and it doesn't mean that if you're reporting another agent, that means we're actually going to do a formal investigation. We absolutely always go through the process of collecting information, giving everybody a really fair chance before we go down the route of going to the board conduct committee. If a breach is reported by a tax practitioner in relation to another practitioner, we won't notify the other practitioner that a report has been received straight away, but we might contact, or we will contact them at some point if we decide that the investigation is warranted. And as I said earlier, we might get one and we look at it and go, not quite so sure. But then we get another one next week and then another one a month later. And then, this actual picture starts to appear. And that's obviously at the point where we would then contact practitioners and potentially their clients and you, if you've made the report, to get more information. Now, as far as notifying the professional association, that only applies if you are aware of the tax practitioner's membership. So in that case, when I say if you do need to do some reasonable inquiry. So, for example, my first point of call would be go to the TPB website. Most practitioners have their memberships on the TPB website because in most cases, well, not all, most cases, I shouldn't say that, in many cases, they are requiring or required to have professional membership because that's the pathway they came in to be registered with the TPB in the first place. Some professional associations, I believe, have a list of who their members are online. And I will just go back to our list. Not all practitioners have to have associations on there, and and they might not have to have all of them on there. So, for example, if I'm a member of 3 associations, but I'm relying on one of them for my membership, I might have only put one on there, or I might not have updated it that I've now joined a new professional association. So again, they're probably the 2 points of where I'd go. Also, if you've got emails that a client's given you, or you've had emails with that other practitioner, often they have those in their footers or on their websites. There are other places that you can look at. Yeah, I think that's about it as far as professional associations go.
Yep, that sounds great. Thank you for that, Deborah. As we mentioned earlier, you're going to share some examples now. So hopefully we can go through some of our case studies just to put everything that we've talked about into context and make it all make sense.
Okay.
Thank you.
So I've got Heidi, and Heidi is not sure whether a breach is significant, but she decides to report the breach anyway. And in this case, we have Heidi's a registered tax agent. She's one of two directors in a small suburban accounting firm, and Jeremy's the other director. The firm employs two graduates and a BAS agent, and the firm's clients are generally, local small businesses and sole traders. The firm recently located to a new established suburb and took on a large number of local sole trader clients operating in the building industry. But during the tax time period, Heidi stumbles across some versions of income returns that Jeremy had prepared for about 7 of his clients, new clients, and the returns appeared to be claiming some rather excessive work-related car expenses that Heidi deemed very unusual given the client's occupations. Now, it doesn't mean they are wrong. So what Heidi did in that case is she talks to Jeremy about it, which is, I think, the right thing to do. And so she says, Jeremy, saw these returns. I thought that the WREs were really high given that, the occupations of the clients. Jeremy assures her that they're all above board. He didn't actually check the logbooks, but, the client said they had everything and, it's all fine. But he was quite evasive about it. So Heidi didn't go any further. He seemed obviously very reluctant to explain the rationale. She didn't feel comfortable making further inquiries because of the way, his demeanour was. So given all of that and given her knowledge and experience on work-related car expenses in the industry, Heidi considers she has reasonable grounds to believe that the expenses were not being claimed correctly and that Jeremy had, most likely breached code. Heidi wasn't certain whether it would amount to a significant breach, noting that she wasn't aware of the scale of the expenses being claimed over the whole client base, and she was unable to confirm if the clients actually did have the appropriate substantiation for the claims in their returns. But in her professional experience, it didn't seem right. Given the number of clients involved and the likelihood that there were many others, Heidi errs on the side of caution and she reports the breach to the TPB. Now, in this case, I'm going to get you to use the emojis. Give me a thumbs up if you think Heidi made the correct decision to report a breach, and a surprised emoji if you think she hasn't made the right choice. Okay, the emoji thing works. This is actually quite fun. All right. Okay. Wow, thank you. So I'm actually really enjoying the pattern that it comes up.
Quite soothing, isn't it?
I got lost in it for a moment. All right. So in the circumstances that we discussed, the TPB's view is that Heidi has made the correct decision to report the breach. She, using her professional experience and her, what she's seen, she does believe that there are reasonable grounds to think that a breach has occurred. So although she wasn't sure, she does report it. She doesn't have conclusive proof, but she still thinks there's a solid enough foundation. So, as I said, she looked at it. Jeremy said Jeremy's actions were evasive. I think that's always quite telling. He hadn't verified with the clients whether or not they did have logbooks, and he admitted to that. And I think that's really telling as well. She saw 7. Again, we see that pattern of quite a few. And, if Jeremy was doing that for quite a lot of other clients, as you can see, those those expenses can then start to really add up and become excessive. And we all know logbook claims, have the ability to blow out a motor vehicle claim from like $3,000, the sky's the limit. So it can be quite substantial. Now, if the breach is investigated further by the TPB, because again, she can make the breach, but whether or not it is deemed significant at the time. And as I said, just because it might not be triaged as significant today does not mean that tomorrow, next week, next month, that other ones don't come in or that new information comes to light. If you've noticed it, potentially the ATO have noticed it as well, and they send us referrals as well. So even though it might not be investigated straight away and deemed not significant, it's not, in this case, Heidi might be worried, or you might be thinking, oh, is she going to get done for vexatious or, a malicious type claim? No, she wouldn't be, and, no sanctions imposed. So, she did it in good faith. No further action was taken. But as I said, you start adding those together. She's done the right thing. And I'll add there, have we got time? I'll add there as well that if Heidi had deemed it not, right, just if we were to change it just a little bit, what Heidi should do in that case is document. Right. So had she had the conversation with Jeremy and Jeremy was not evasive, right? And Jeremy said, yep, I went through the logbooks. And I'm really sure of it. Although I didn't see 4 of them. I saw 3, I didn't see 4. If she then makes a note of it to say, I didn't report it because of this, she's actually satisfied her obligations. And if down, 2 months later, she comes across another whole heap and has the conversation with Jeremy, and then he's evasive and she reports, she still reported within the 30 days because she documented it. She documented her reasons why she didn't early on. And then later on, she was like, yeah, actually, this is now a breach. All right. So I think that's a really important thing. If you're not quite sure, one, err on the side of caution. If you're not quite over the line yet, make sure you document it, because if something comes up later, you can always use that. I'll go to the next case study, and I think this one, can you tell me, is Grace? Is that right? Yep. So in here, we've got Grace is a registered BAS agent. She attends discussion group sessions with other registered BAS agents. Why is it that I see Nicole at her coffee group in this one? This is funny. But anyway, she's also a member of online forums and covering new and emerging issues in the BAS agent space. At a recent discussion group, Grace overheard a couple of the other attendees gossiping about a mutual acquaintance, Noah, and Grace knows who Noah is, and they're talking about how Noah has been falsifying his CPE certificates, and he's been telling the TPB that he's been doing CPE, but they say he hasn't actually been doing CPE. So in this case, Grace has made no further inquiries. She's only overheard a couple of other people at the discussion group talking about it. She's got no evidence. And so in this case, she would not report this. It is just hearsay. It is not, there is no proof. And in fact, in this particular case study, Grace had actually seen Noah at a couple of the other discussion groups. So, all the signs pointed to perhaps this was just a couple of, disgruntled competitors potentially having a bit of a gossip. So in these circumstances, Grace has no obligation to notify the TPB. She has no evidence that he's been falsifying his CPE. And in fact, as I said, she'd actually seen him at a couple of the discussion groups herself. So that just didn't make sense. And so she doesn't have any reasonable grounds. If she, as I said again, if she wasn't sure, she can just make a note of it. If coming back later on, she actually gets some solid proof, she can then go back and make a report at that point.
Great. Thanks for sharing those, Deborah. Next part of the webinar should be a little bit fun, and we're going to look at debunking the myths around breach reporting, because we have noticed that people might have a few misconceptions around some of the obligations. So we just wanted to talk people through that. So the first one that I've got for you, Deborah, is, do registered tax practitioners need to report unregistered preparers providing a tax agent or BAS services under the breach reporting obligation?
Okay. I'm going to say this is a bit tricky, and I'm only going to say it's tricky because it is if I'm talking about this particular bit of legislation, all right?
Yep.
Under breach reporting obligations, no, you don't. And you're going, what do you mean, no, I don't? Breach reporting obligations, this section of the legislation is just about registered preparers, right? So it is just saying that you have a positive obligation to report yourself or another registered agent if they've breached it. All right. Now that doesn't mean that you don't report unregistered preparers, right? Absolutely, you should be reporting unregistered preparers, and we encourage you to do that because they're the ones that are hard. We can't see them, right? So please do that. But under this particular piece of legislation and just this paragraph of legislation, there's no obligation there.
Excellent. Thank you for that.
Confusing, right? You think about the whole obligation as a whole, but we're just talking about this particular one. And yes, you do have an obligation, but it's different.
Well said. Thank you. The next myth that we have is, can registered tax practitioners report based on hearsay or other opinions, and do they have to substantiate these claims? And I think this goes right back to what you were saying in the case study just before. So if you can just touch on that one.
Yeah, again, reasonable grounds, that a breach has occurred. So that means you have to have some facts. It can't be hearsay. It can't even be, I saw somebody on a forum ask a really dumb question. That is not a fact. All right. And let's be honest, we all have bad days. And, we could be tired and asking questions for a whole bunch of reasons. So, it is about having conclusive proof. And that's one of the reasons why we do ask that you don't do anonymous claims. And, tell us if you've got a problem and you're, concerned about your safety or concerned about anything, please give us all that information. But often when one of the reasons we can't do more action on some of the complaints we get is because we're just missing some really important information,
Excellent. Thank you for that. The next one, how about registered tax practitioners need to be on the lookout and report all code breaches? Is that a myth, or can you debunk that for us?
Yeah, no, it is a myth. We're not looking for you to tell us about every single breach, right? What we're looking for is significant breaches of the code. So you only need to report those code breaches that are significant. And if I go back to what's significant, that can be a whole, there's a lot of them. There's a pattern. It could be, there's a significant impact to the client or the Commonwealth's revenue. So yeah, you don't need to be looking for them. When you take on a new client, don't put on your, investigator hat and go, what did they do wrong? And I think every practitioner in the room today, it's quite common to go, when a client comes in and goes, my previous agent didn't do this and didn't do that. And then the longer you have that client, you realise it's not the other practitioner. It's actually the person sitting in front of you. So, you do need to have proof and, and also take into consideration if the previous tax agent did do something wrong, whether they tried to fix it. But it's all about significant breaches, not just mistakes, a one-off mistake,
Yep, makes sense. Thank you. The next one, I know that we have covered this today as well, but I think it comes up a lot and we're still getting questions in the chat about it. So I'm going to ask you again, can registered tax practitioners remain anonymous and not disclose their personal details when making a breach report?
Okay, now this is a really good one because when we're talking specifically about breach reporting, when you're making a breach report, you have to give your name. And the reason for that is otherwise you haven't met your breach reporting obligation, right? So if it gets found out that Deborah Anderson didn't report on, Julie Shaw, even though I did, so maybe I did it anonymously, right? I have to prove that I met my obligation to breach report, right? And I guess I talked, and hopefully I didn't confuse too many people, but you can do anonymous reports as well for other breaches, but that doesn't satisfy your breach reporting obligation here. But please, if you are concerned about your safety or any of those types of things, let us know. All right, we will always take that into consideration.
Thank you, Deborah. Just before I go to our last myth, I might just get you to talk us through the Whistleblower Act as well while we're on this topic, because I think it's relevant to what you've just been saying. So what protection does a tax practitioner have under the Whistleblower Act when they report something under the breach obligations as well?
So the Whistleblower Act is interesting. One thing that we have had is quite a lot of people saying that they're eligible for whistleblower protection when in fact they haven't been. And that's because there has been a bit of a misunderstanding about what whistleblowers actually are. And I think, Julie, have we got some whistleblower webinars on our YouTube channel?
We do have some information in some of our webinars about the whistleblower, but we can also send out some information following the presentation today that just goes into a bit more detail about it, because it's all about the relationship, isn't it, when you're looking at the whistleblower?
Yeah, so you actually have to have that direct relationship with the whistleblower. So, for example, we talked about one of those case studies with the two people that worked in the same firm. So the woman that claimed or who breach reported, she could actually go for whistleblower protection because she's in the same practice as that particular person. Whereas, if I'm doing a complaint about, the agent down the road that I have no relationship with, I can't claim whistleblower protection. So I think you do need to be making sure you understand whether or not you're in or out. I used to think you just ticked yes if you weren't sure, but in fact that doesn't work. So you do really need to understand that relationship or whether you do have an eligible whistleblower relationship, to see whether you're protected or not.
Thanks, Deborah. We'll make sure we add that information to our notes that we send out later on today. So the final myth for today is, does breach reporting include reporting clients who fail to correct a false or misleading statement made to the TPB or to the Australian Taxation Office?
Okay, no. So breach reporting is all about the conduct of registered tax practitioners. So, and again, if I go back to, it doesn't even relate to unregistered tax practitioners. So this particular paragraph, this particular piece of legislation, the breach reporting one, is only about registered tax practitioners, tax and BAS agents. If you're looking about the information for your clients, that is actually under the reporting of false or misleading statements. So again, it's another section, but not this one. And I guess I did bring it up earlier today to say there has been a lot of change in a really short period of time. If you haven't done a course on the TASA for a little while, it is really worthwhile, I think, going and doing a formal course on the TASA, because it has changed a lot in the last couple of years. And of course, we've got a heap of guidance on our website, and going through all of that can be considered CPE as well. But sometimes it's just really good to go right back to basics in a course, starting where they start with a 0 level of knowledge.
Thank you, Deborah. I have had a few people asking about, can we recommend courses today, but the TPB isn't in a position to recommend. I'd suggest talking to your professional association. If you're a member, they can offer advice on that. If you are looking for, I guess, a refresher on the TASA and the code, we do have a webinar available on our YouTube channel that goes into all of the code obligations. So I'd encourage you to have a look at that as well. And yeah, I guess that's a good place to start. But Deborah, just a couple of questions now, just to finish off today. Just wondering, I've got a question here from Miriam, and she's asking, does a rectified breach need to be reported?
Depends. Even if it has been rectified, if it is a significant breach, yes. All right. But of course, that's part of the information that's lodged when you do notify, and that it's like everything. We look at the individual circumstances of that case. So we look at it and go, okay, well, this is what the breach was. This is what's happened since it's been rectified. All good, right? And it's not systemic. It's not egregious. It's, none of those things. It was a mistake. It's been fixed. Tick, move on.
Great, thank you for that. I know that we've had a bit of conversation today about unregistered preparers, and you've talked about that a little bit, but I just wanted to find out what evidence someone should provide to the TPB if they are reporting someone who's unregistered.
Absolutely every single bit of information you might have, no matter how small it is. Tax practitioners are not investigators. Right? We have no idea what investigators need. I still have no idea what an investigator needs, right? Because that's why they're investigators and we're not. So as much information as you possibly can. And that's why we ask that, even though you can do anonymous reports for unregistered preparers, because it's not under the breach reporting, we do, it's not helping, is what I'm going to say. So if you can put your name on it, if you can give us make a Gmail account, something easy so that we can contact if there are other questions. But, we don't share your details. So, and also if you do want to remain anonymous, even if you put your details in there, tell us. I absolutely want to stay anonymous. I'm concerned for my safety. We both live in a small town, or we share an office even, or something like that. Give us the situation and we will do our absolute best to protect your identity.
Thanks so much, Deborah. I know we're sort of running out of time, but I just had one question, because I noticed a couple of people have put this into the chat, and we may need to take it offline if we don't have enough time to address it. But just quickly, can tax practitioners be sued for defamation if they're breach reporting on another tax practitioner? Is that something that you can give us a quick answer for?
Well, I think if it's vexatious or malicious, absolutely. If it's not vexatious or malicious, no. I think, defamation is when you're ruining someone's reputation for something they, done. I mean, if the TPB finds a breach, or the ATO finds breaches, or, it's kind of founded. But, I certainly, you probably don't want to be standing on, Twitter or X or whatever he calls it now, you know, saying, hey, this person's done the wrong thing, you know, that's probably pushing
Yeah.
it.
And I think that is clear in our guidance, isn't it? When you come back to the whole thing about you need to have evidence and it needs to be significant and not to make vexatious, I can't talk either, Deborah, complaints. So I think it's quite clear, isn't it, that that's covered.
Oh, absolutely.
Thank you so much for that. So just quickly to finish up, I just wanted to share some information on how to stay in touch with us. So if you would like some more information, just jump onto our website. As Deborah said, we've got a lot of guidance on there to assist you further. So it's tpb.gov.au. You can also follow us on Facebook and LinkedIn. We also have our TPB e-news, which is our monthly newsletter that we issue each month. And I'd highly encourage everyone to subscribe to that. You'll get the most up-to-date information there by subscribing. So just go to tpb.gov.au/newsroom to subscribe. You can also view our YouTube channel. We have a lot of videos on there from past webinars that are very helpful. And if you do subscribe to the channel, you also get a notification when we put up new videos as well. And the other good part of that is that you can still claim continuing professional education or CPE for viewing those videos as well. So I just want to say thank you so much to you today, Deborah, for sharing all of that amazing information. Thank you to Daniel and to Eddie as well for assisting us with the questions. And just one last thing that we will ask of you today is to complete our exit survey. It's very quick, only takes one moment of your time, and it just helps us improve on the webinars and also let us know if there's anything you want to hear about. We'll look at the topics that you put through and try to put those into our program of work. So that survey just pops up in your browser when you leave the webinar today. So thank you for taking the time to do that. And once again, thanks for joining us today, and we hope that you enjoy the rest of your day. And talk to you soon.
Right. And thank you to everybody for coming today. And hopefully we'll see you this afternoon for disqualified entities. And thank you, Julie, and the rest of the TPB team for your support today. Have a great day, everyone.
Thank you.